Well, it's 1 p.m. in Lagos, Nigeria. That means it's time to do 55 minutes of business, giving you update from the world of business on Business Incorporated. And here's what we have prepared for you. In South Africa, the Agribusiness Confidence Index dropped slightly for the second quarter of the year. And Zimbabwe's reserve surges, and now it hits $700 million. Egypt has unveiled a major new gold deposit. You're welcome to the program. I'm Ini John McQuan. We start from the global space as usual, where oil prices climbed over 2% on Tuesday as Iran-Israel tension intensified, and U.S. President Donald Trump is asking everyone to evacuate Tehran, increasing the prospect of deepening unrest in the region and disrupting oil supply. So for this afternoon, we see for Brent, it's up $74.40 a barrel after it gained 1.6%, and WTI is also up 1.87% to $73.11 a barrel. Both benchmarks settled more than 1% lower yesterday, Monday, in hope of easing geopolitical tensions after media reports of Iran seeking an end to hostilities. However, the conflict took a turn for the worse on its fifth day, that's today, as Iranian media reported explosions and heavy air defense fire in the capital, Tehran, and also air defense fire in the capital. Over in Israel, air raid sirens sounded in Tel Aviv in response to Iranian missiles. And Iran is the third largest producer among members of the Organization of Petroleum Exporting Countries. Hostilities could disrupt its supply of oil and thereby increase prices. Trump has said that Iran should have signed a nuclear deal with the U.S. before Israeli strikes began, and that he believes that Iran now wants to reach an agreement. Easing of U.S. sanctions as part of any deal would allow Iran to export more oil, weighing on global crude prices. Elsewhere, OPEC and its allies, which include Russia, which pumps about half of the world's oil, said that it expects global economy to remain resilient in the second half of the year. It also trimmed its forecast for growth in oil supply from the U.S. and non-OPEC countries in 2026. Still in the oil space, the Organization of Petroleum Exporting Countries says despite a decline in production, Nigeria retains its position as Africa's largest crude oil producer for the month of May. In its latest monthly report, the oil cartel says Nigeria's oil output dropped to 1.45 million barrels per day from 1.48 in May. The previous month. According to the report, despite this decline, Nigeria's oil output, which is the biggest in Africa, surpassed Libya, Algeria, and Congo. OPEC notes that its figures were deprived from direct communication. Building on the momentum from May, Nigeria outpaced Libya, which produced 1.36 million barrels per day. Algeria stood at 920,000 and Congo 268,000. OPEC says data obtained from secondary sources indicate that Nigeria's production reached 1.54 in May, an increase from 1.52 in April. Away from oil now, gold rebounded on Tuesday as heightened geopolitical uncertainty is stemming from Israel-Iran fighting, and U.S. President Donald Trump's call to evacuate Tehran has led investors to seek safe haven assets. So we look at the numbers at this time. We'll see spot gold is in the green, 0.4%. It's $3,396.67. U.S. gold is unchanged at this time. Spot silver follows spot gold. It's up 0.3%, $36.41. Platinum is also up more than 0.5%. It's 1,251.20. Palladium is also up at over 1,000. And of course, we know that all of this follows what's going on between Israel and Iran. Also, another factor driving this is the Fed. The Fed is expected to hold rates steady, but the focus yet again will be on the path that the chair, Jerome Powell, charts out for future rate cuts, and traders are currently pricing in about 2 cuts by the end of this year. And then we'll see how that happens. I believe there's a meeting tomorrow around this to give an idea of the path that Chair Jerome Powell might be taking. And coming back here in Nigeria, the Nigeria Employers Consultative Association, that's NECA, it's the umbrella organization of employers in the organized private sector. They are planning their 4th Nigeria Employers Summit, and it's scheduled to hold on Tuesday the 25th to Wednesday the 26th of June at Abuja. And this year, the summit is convened under the theme Enabling Sustainable Enterprise in a Transitioning Economy, Aligning Fiscal, Trade, and Regulatory Reforms for Inclusive Development. The body also met with journalists in Lagos to emphasize the need for the summit.
This is the biggest employers advocacy platform, not only in Nigeria, I can arguably say in Africa, because there's still, from my engagement and interaction with colleagues across the African continent, there's really no gathering that focuses on employers to deal with those issues. So for us, we have a divergent perspective for the OPS, but the message that we're also all trying to communicate to government is make the environment much more hospitable for businesses to thrive. That is our simple, most critical message to government. Now, the need for government to align the reforms. Reforms are meant to promote. Reforms are not ends on their own. They're to initiate a process that will lead to something. And most times, those reforms are to initiate the process of growth. So, if you are a reformer or the reformist, and you are not close to the individuals that the reform will affect, you might come with a beautiful reform in context, but operationalizing those reforms will be difficult for those that you are meant to help. In fact, you might be killing those that you are purposely trying to save.
The Debt Management Office, on behalf of the federal government, has officially launched its 50 billion Series 3 sovereign green bond. The Director General of the DMO, Patience Oniha, who made this known at an investors forum in Lagos, says that the bond is aimed at providing institutional and individual investors with an opportunity to support green initiatives while earning competitive returns. She explains that the newly issued bond will channel funds into key sectors such as renewable energy, clean transportation, sustainable water management, and climate change adaptation. The bond offer, which carries a 5-year maturity period, opens June the 16th and will close on Wednesday, June the 18th, with allotment scheduled for Friday, June the 20th.
Could this be this? FG.
The first green bond we issued in 2017 was in recognition of the fact that President Buhari had signed that agreement, so we're committed to doing something. And the whole idea is to pull some government assets that are in the budget that are eligible and take some part of the new borrowing in that same budget and say, okay, this will be devoted to those products. That's how we've run with the green bonds. Why are we issuing it? We all know the environment has not only changed, but is still changing. We know about the climate, and it is very hard to deny. So even if there were people who were in denial previously, it is really hard now to deny that there's something called climate change, and that if we don't take actions, the implications on us humans and our entire environment, whether it be the waters or the livestock or whatever, are very high.
The chairman of the Federal Inland Revenue Service, Mr. Zach Adediji, has directed the extension of tax office operations to weekend for the month of June. The directive, according to a statement by Daria Adekombi, Special Advisor on Media to the FIRS chairman, is part of Adediji's commitment to match the agency's customer-centric policy with tangible action. With the directive, tax offices are expected to open for business from 10 a.m. to 4 p.m. on Saturdays and 12 p.m. to 4 p.m. on Sunday throughout the month of June. The statement says that weekend service, which started on June 14, will end Sunday, June 28, and it's aimed at helping companies who were mandated by law to file their tax returns by the end of the month to meet up with the deadline. And yesterday we saw those numbers which came in line with forecasts by economists. And I think like financial derivatives company, Nigeria's official headline, we saw that decline for the second consecutive month to 22.97% for the month of May. According to the data released by the National Bureau of Statistics, the figure represents a 0.74 percentage points decline against the 23.71% that was recorded in April. Key highlights of the NBS report shows that food inflation, which is a significant driver of overall, fell further to 21.14%. Core inflation dropped to 22.28, while urban and rural inflation also fell last month, mostly due to slowdown in the rate of food and utility price increase. However, some economists do not totally agree with the numbers released by the NBS.
The Nigerian Bureau of Statistics is causing a bit of confusion in the system. One of the things I must say is the fact that we haven't seen the first quarter GDP reports. So if you're going to be comparing these rebased inflation numbers, what are you comparing it against? Are you comparing it against the previous GDP numbers, which will obviously be a distortion? And they're talking about rebasing the GDP. What is the rebased GDP and what is the growth of GDP for the first quarter? We're already in June and we do not know how the economy is growing in Nigeria, according to the National Bureau of Statistics. We all have to depend on our own analysis and our own research of the markets. So there are no official data. So the Nigerian Bureau of Statistics, in telling us that inflation has declined, it's important to consider that against what growth numbers are you considering? Against what GDP numbers are you considering? Because you're looking at a benchmark of inflation that you've adjusted and you're comparing it against old GDP numbers. So there's a confusion there. Having said that, I think what we need to focus on now more is core inflation.
And that was the Chief Executive Officer of the CFG Advisory, Mr. Tilewa Adibajo, was a guest on Business Morning earlier today. I'm talking about inflation. Let's just zero into a commodity that perhaps could tell us the direction of inflation, and it's bush mango seeds, commonly known as ogbono in most homes, make up a lot of soup, especially from the eastern part. And to discuss this with us is Rosemary Ahira. She's an analyst with Financial Derivatives Company. Hi, Rosemary. Good afternoon and welcome to the program.
Good afternoon. Good afternoon, Ini. Thank you for having me.
Good to have you. So we see that the average retail price of ogbono dropped sharply by more than 50%. To 5,000 from about 10,500, and it's not easy to see a drop in price, especially at this time, not just in Nigeria but around the world, in most countries at this time. But what do we know as the driver of this drop in the price of this seed?
Well, majorly, I can say that it is due to high volume of harvesting currently happening. So typically, ogbono is harvested between April and August of every year. And at the moment, we are in the heart of the harvesting period. So there's a lot of harvesting going on. So this is increasing supply volumes in the market. And again, the weather, we are typically in the rainy season. So ogbono requires a dry but cool weather condition to be stored properly. So with a lot of rain, there's humidity, and it could make this commodity spoil easily. So harvesters and traders that have stockpiles do not want to incur fruitless storage costs. So they are pushing their stockpiles into the market. So we are seeing a large volume of ogbono going into the market. So this has caused a downward pressure in the price of this commodity.
So obviously, it doesn't sound like it's sustainable because, like most crops in Nigeria, unfortunately, because there's no preservation and storage facility or value chain development along that. We see when it's harvested, it's cheap, and then when it's off season, it goes up. So we can expect that it's the same thing applicable to this.
Yes, Amy, I do agree with you. During the harvest season, typically the prices do go down, but when we start to move outside the harvest season, that's outside of August, you tend to see the prices increase. Like earlier in the year, in January, it cost about 10,500. Then in March, it kind of slowed down to about 8,000 naira because it is not structurally cultivated. It's more or less widely harvested. So we have people going into some people going into their cultivation to pick out these fruits for harvesting, while we have others going into the bush to pick out the melon seeds from the mango seeds from the trees to harvest and all of that. So the decline in price is not sustainable at although we are still going to enjoy the low prices till the end of the harvest season, but going outside the harvest season, it is going to increase, except and only except if the stockpiles that they have outside the harvest season is enough to sustain the prices till we have another supply peak.
Yeah, and it would also be interesting if we could hear conversations about developing the storage and preservation facilities that, will keep the price steady almost all through the year. But I don't think, I mean, of all the crops that we have things like yam and things that are even more basic. They have not even received such attention.
Indeed. But recently, Calabar has been doing something about it. So they've trained over 870 women in the cultivation, harvesting, and processing of ogbono seeds for commercial purposes. And we even have the African Development Bank giving over $500 million to the South, and Southeast states that have the potential to produce this commodity, and just investing in that niche so that this crop can be widely or mass produced, and so we'll have enough to satisfy domestic demand and also um, export as well, because we do have an export potential. Companies like the Price Pally are exporting this commodity because it costs about 3 to 5 times the same amount it does here in the country. That's about 10 to $30. That's 15 to 45,000 naira. So there's export potential. So traders or harvesters get to not only sell to domestic markets but to international markets as well, which is very profitable for them.
All right, Rosemary. Well, we hope that Cross River State can lead the way, and if we can export it, yeah, obviously it's good for the country, not just Cross River State. But thank you so much for sharing that information with us, Rosemary Ahira, analyst with Financial Derivatives Company.
Thank you so much for having me.
Right, let's take a break now. When we come back, we will be here with the market numbers, intraday market numbers. Please join us again. Let's head to the markets now with Will Ibong. Will?
Thank you very much. This afternoon, I don't think I came with good news from the NGS. Most markets actually are in the red. I wonder what's happening. Is it Trump jitters that he left the G7 meeting going to go, quell the tensions
Will,
in the Middle East?
let me just ask you a straight question.
Okay, go ahead.
You made an investment and you have made profits. What's the next thing to do?
Well,
it's just normal.
It's a take profit, but I think you bite it.
But we're still on 115.
Hold for the long term. Don't be a short-term trader.
Okay.
Okay, so let's just see. Major stock markets in Africa were negative at intraday. Nigeria's NGX was negative at intraday. I mentioned that, snapping last week gains as investors continue to take profits. We see it down 0.16%, still at 115,000 points. But we see GSE in South Africa also trading lower at intraday, 0.44% down. Let's look at Egypt, EGX and the 30, EGX 30, and see how they performed. 1.24% down, massive drop for that exchange. And Nairobi Securities Exchange closed Monday's session in the red. Second consecutive close, red close for that exchange. But let's see if they make a turnaround. Well, at the close of business today. But the Debt Management Office, let's see how fixed income space now away for a bit of equities. Debt Management Office in Nigeria has launched its Series 3 50 billion naira green bond. That was yesterday, Monday, the largest yet. The federal government kicked off its green bond journey in 2017 and again in 2019. Now with the Series 3, now 2 times the size of the previous issues. But we're going to have Caleb Alimi, Chief Dealer, Providence Bank, joining us to unpack the implications of this. Caleb, good afternoon. It's good to have you on the show.
It's good to be here, Will. Thank you for having me. Good afternoon.
Okay, so Caleb, can you tell us why right now the government is intensifying its green push? What does it tell us about government priorities?
Well, I wouldn't say they're intensifying the green push. What I would say is they're executing a budget that has been agreed last year. This green bond issuance was actually approved sometime last year and it's just being executed now. So I wouldn't say they're intensifying the push for it. I'll just say that they're, following through something that had been planned and had been approved a while ago.
Okay, so you were at the launch yesterday, so you got first-hand information, you saw it for yourself. How does this timing, look at the countries, the realities, the economic realities we are in now, how does it reflect our current economic reality? Debt is mounting. This timing to launch this series now, is this the right time for it?
Well, again, is it the right time for it is another interesting question. What I can say is the projects that they're targeting are projects that lead to sustainable planets. The government of Nigeria is, part of an accord that looks at protecting the entire planet. The part of the points that were made yesterday was that we're borrowing from the future, and we need to ensure that that future is available for even our children's children. As a matter of fact, aside the fact that they're borrowing in terms of funding, we also need to look at, projects that they're taking on, projects that are going to restore the planet, as it were, restore the ozone layer, reduce the impact of CO2 emission, reduce the impact of climate change generally. I mean, they're looking at the part of the project is afforestation in some parts of the country, which would add to efforts to part of restore the planet, as it were. They're going to be building dams, building, some clean energy projects, part of things that they're looking to do. So I'd say it's sustainable financing, and it's looking at projects that would impact positively on the planet.
Okay, speaking of planet, will this attract real money? This bond is targeting both institutional, retail investors, but it's got a high ticket size, and competitive yield. Who's most likely, do you see, participating in this green bond?
I think everybody's going to jump on it, as we often say. The institutionals are going to jump on it. The retail investors are going to jump on it. It's 50 million in size. I think the minimum entry point is about 10 million, and then multiples of 1 million. So you could say it's for HNIs and then institutional investors. And I think the size is kind of small. If you look at what the NGX loses in a day, it's way more than this 50 billion. So that money that they took from the NGX, they could possibly just, plug it into this green finance and it will be done. The size is decent. The size to me is small, but I mean, it's just a project that they're targeting, and it will be well oversubscribed. I expect it to be well oversubscribed. It closes tomorrow. It was open for just 2 days, yesterday, today, and then it closes tomorrow. And I'm sure it will perform very well to be oversubscribed.
I think you were there. Did you see, was there anything that showed investor confidence in this bond series? We have the Sukuk, we have other savings bonds from the government. Was there any show of confidence from investors that
Yes, definitely. Yes, definitely. The room was, if I would say, they said there were people with deep pockets in the room. You had pension fund administrators, you had insurance companies, you had banks in the room, and then you had other asset managers in the room as well. So it was a room packed with a lot of capital and a lot of dry gunpowder waiting to be deployed. So yes, investors are ready and waiting for this.
So what are we looking now? Okay, fine. It's a fantastic project we're looking at here. Fantastic, tied to renewables, tied to the environment. But how's the debt? What's the government mention how they're going to manage this debt? Because we've got mounting debt. Yeah, it's going astronomically right now. So how's the government, are they planning on repaying back our debts and the interest rates? What were the sound bites you heard regarding that yesterday?
I mean, so debt-wise, we all know where debt financing is in Nigeria. I know what your concerns are. Your concerns are that, we continue to borrow and we continue to borrow so long as we run a deficit budget and we're not looking to cut other fiscal measures. I think or other fiscal expenditure. I think, we'll continue to have this need to borrow. However, all prices are rising. If you watch our reserves as well, they're consistently rising, albeit not a lot, but they're consistently rising. So I think the future of Nigeria is positive. If the government in the future can reduce some of the fiscal expenditure, especially the recurrent ones, the cost of governance, for example, we could have a different story to this.
Caleb, are you there?
Yes, I'm here.
Okay, so basically, the government has a debt that's mounting, and we hope that they are able to repay the debt, and that this project, the monies that are taken or that are raised from these green bonds, are actually used for what is purposed, and so people can actually see that this project is tied, this bond is tied to this project, and not some, well, we know all the elephant projects
Yeah,
we've got in Nigeria. We just hope that we have this tied to project. And then to make really more sense, when we see these bonds being raised, when we see these monies being raised, and nobody would query that, oh, we're getting more, into more debt, because they know the money is being used for projects that are, like you say, for our
yes.
future. So if
I'm
the
actually
okay, go ahead.
I'm actually very confident. Sorry, I'm actually very confident in the utilization of this. I'll take a case in point like the Sukuk bond. Even across Lagos, you'd find, Sukuk Road starts from here, Sukuk Road ends here. These are targeted financings, targeted, financing, project finance, as you could call it. They're targeted for specific projects. So, for example, since we can see the Sukuk implementation of the Sukuk bond and utilization of those funds, I think this one is also going to be just like that. We're going to see exactly, the dams that they're building. We're going to see the upgrading of the water supply projects that they say they're building. We're going to see the clean energy investment that they say they want to make. It's going to be very, very easy. And, to see, it's being executed through the Federal Ministry of Environment and the Federal Ministry of Water Resources. So definitely, these are projects that will be able to tie down and then say, you were given X amount of money, what did you use for it? And I'm sure this is the type of project that a lot of eyes are usually on. So I'm sure they're going to deploy. The confidence I have in this is because of what they've done with the Sukuk financing,
Okay, are there
targeted
platforms?
projects.
Are there platforms where investors can actually monitor and see what their investments are being used for? And is there any platform that has been planned out for this?
Well, no, not to the best of my knowledge currently. I think as concerned Nigerians, we could just, get the Federal Ministry of Environment reports and read what exactly they've done and then go to those locations where they say they've done what they've done.
So we have the NCB auction coming up tomorrow. Expectations for that. We have 162 billion on offer. What do you see for tomorrow? What are your expectations, Caleb?
Well, what we've seen, like we've seen consistently over the last three auctions, is that the federal government is borrowing. However, their appetite to borrow shows that they don't want to borrow expensively. We've seen the 1 year paper drop consistently from 19.63 to 19.56 to 19.35. So, and the offer on this one is very small. It's 100 billion on the 1 year paper, 162 billion in total. The last auction saw an auction of 450 billion, and it was also well oversubscribed. So we expect to see a lot of oversubscription here, and we expect to see interest rates actually drop. We're predicting that it closes somewhere around between 18.5 to 18.8 or thereabouts on the discount rate because of the size on offer and the fact that the market is very liquid. Also, people that are taking their monies out of the equity markets will probably flow down into the fixed income space. So we see that investors will flood this market in order to protect themselves from possible future losses, and because of that, interest rates will drop or
Thank you
should
so
drop.
much. Thank you so much, Caleb Alimi, Chief Dealer, Providence Bank, for sharing your perspective on the program.
My pleasure. Thank you very much.
Let's look at other markets now. In the Middle East, we see most exchanges also closing in the red at intraday. You see Abu Dhabi down 0.37%, Dubai down 0.37%, Abu Dhabi also down 0.34%. Almost similar margin we're seeing here. Still within the region, we see the Tadawul, that's Saudi Arabia, also closing down 0.8%. I think the jitters from the Middle East crisis is still impacting on investors' sentiments, and we see that influencing trading at intraday. Qatar is also down 0.51%. Let's look at the stock futures in the US and see if they sustained yesterday's gain. Well, we see them falling in pre-market trade as Israel-Iran crisis deepened and President Trump abruptly left the G7 summit. Dow futures slipped 0.56%. We see S&P and NASDAQ 100 futures also dropping 0.58 and 0.62% each. Trump urged an immediate evacuation of Tehran and denied his early G7 exit was tied to a ceasefire offer. Oil prices see jumping with WTI up 1.5% and Brent gaining 1.7%. That's really, all markets are rallying and the news, but stocks are not having it easy. Markets had rallied on Monday despite the tensions. We saw S&P yesterday rising 0.9 and NASDAQ gaining 1.5, but today we're seeing that being lost. Well, let's look at Asia, how they closed Tuesday. We can tell it was mixed trading as investors continue to monitor Israel-Iran conflict after President Trump called for an evacuation of Tehran, and he also left the G7 meeting early. Fitch said the conflict remains contained, while analysts are warning of growth risks from lingering uncertainty and high energy costs. Japan's Nikkei rose 0.59%. We see that at least that was a turnaround for the Japan's index. 38,536 points. Kospi in South Korea inched up 0.12%. Hong Kong's, and we know that in Japan, the Bank of Japan also dropped their bonds. They're tapering on their bonds offer there. And South Korea 0.12% up. Hang Seng in China is down 0.34%. Mainland China is also down 0.12%. To see that up there. We also have India's stocks slipping at the close of business 0.37%. It's a mixed picture for Asia, while other equities are reacting sharply to what we're seeing in the tensions in the Middle East. We're hoping that there's be a turnaround for stocks and possibly, like Yini said, take profit, but take it slowly.
Will, one interesting thing that you raised when you're having a conversation with Caleb is if there's a platform to actually monitor some of this. I know the sukuk, we see it, but I guess it would also be more encouraging seeing the death of trust between the government and the people. If there was a place people could actually go and monitor, maybe there are updates, or this is the timeline for this project, this is the stage we are at this time, this is where we should be at this time.
Completion of the project, they can actually say, yes, the money is, even if it was borrowed and they're going to get interest, to see that there's a project that's been completed as a result of that. They feel a part of the country that way.
But I guess the government is very confident because every time they come up with these bonds, whether it's oversubscribed, so there's no need to bother yourself, to get more people. We're in a good place, so I guess
we hope to see them, step up in terms of accountability and transparency, and let the people actually see what the monies are used for. That's what I'm more concerned about.
All right, we hear your concerns. All right, now let's stay with the market now with Lars helping us to see what investors are doing in Berlin or Europe generally at this time. Hi, Lars, good afternoon. So what's the sentiment like?
Yeah, Ini, what can I tell you? Good afternoon. It's really, we have global markets, global problems. It's interesting when you run through these world markets, how it's really the same topic. Of course, everyone's focusing about the crisis in the Middle East, the escalation there. It's affected Asia, of course. It definitely affects the US. And here is really not an exception. We're seeing the DAX down today by about 0.5%. We see the FTSE 100, the CAC 40 over in London or in Paris, also down. And it's, of course, all with the same reason behind it. And ironically, also the same story yesterday when all of them found their way back into the green, because it looked like maybe this conflict could end faster than we thought. It doesn't look like it anymore. We had the Trump leaving the G7 story, as you just referred to, as well. So things are still dicey, and that will, of course, continue to impact oil prices and probably many other parts of the economy. So the sentiment in Frankfurt really, Ine, is the same as we've seen in other markets. People are worried, and that's why markets here are down as well.
Yeah, but it seems a bit brighter when you look at the price of groceries. I hear some chains are actually reducing prices.
Yeah, I got a story here for you with these lower prices that we saw. One of the more interesting stories and analysis that I've seen here for the German consumer economy. Let me tell you what happened here. We have a large retailer, the biggest German grocery chain, that is called Lidl, and they announced over the weekend they would lower prices on 500 articles. That's a large part of the articles that they're actually selling. Of course, all the others are following suit. We have 4 major grocery brands here now. They're all cutting prices, and consumers are set to save around 2% on their groceries compared to what they had to pay until last week. But at the same time, Ini, we've seen, of course, pretty drastic inflation in grocery prices over the past year. And these price cuts now, they're just putting a small dent into that. I want to give you an example here. Butter is one product that has increased in price over the past 3 years in Germany, in Europe. Much of that has to do, of course, with higher energy costs, with higher feed costs for dairy farmers. And now when we look at how butter is selling, yes, they cut the price down, in this case to 1.99, but it was 1.69 3 years ago. Same with chocolate. There was some analysis done on some particular chocolate products that economists had taken a closer look at. And that price just over the weekend dropped now in retail by 32%, but it is still 50% more than it was in 2022. That is, of course, before Russia's war started in Ukraine and energy prices skyrocketed, leading to all around higher inflation.
Yeah, but even when consumers are celebrating these lower prices, somebody still has to pay for it. Any downside to it?
Yes, Ini, there is, and that is exactly the problem. Like I said, with all the major grocers following suit, there are no real winners among those grocery chains, but all of them actually lose. These lower prices drastically cut into their margins, costing those companies billions, according to a quick study that the analysts have already made. Now, customers save relatively little, but companies lose a lot. And you're exactly right. They're likely not just eating up the cost here. They will have to save money elsewhere. And most likely, they will put more pressure now on producers, the agricultural sector. And that particular sector, of course, has been under pressure for a long time, with grocery prices in Germany being comparatively low anyway. Now, dairy or meat farmers have to likely deal with even lower prices for their products. Same is true for wheat. This will generally weaken a sector that the country should rather strengthen, especially since the agricultural sector is currently facing so many difficulties. We have climate change, extreme weather events, and yes, of course, these higher energy prices as well. We are seeing them squeezed, and some experts now are worried that lower prices have a very low benefit for consumers, but cause a lot of pain elsewhere.
All right, always a downside or consequence, to one side of a policy or plan. Well, thank you so much, Lars, for bringing us up to date on that.
Yes, thank you, Ini. Thank you.
Right now, let's come back to Africa. South Africa's retail banking sector is continuing the trend of downsizing and scaling back their physical presence in the country as clients turn to digital options. An assessment of all banking branches at the full year 2024 shows that the country has seen the net closure of 9 branches among the top 5 legacy banks, with Standard Bank narrowing its footprint the most. Even in cases where branch closures are not as prominent, the banks have also moved to shrink their point of presence. Our South Africa correspondent Innocent Semosa has more on this.
FSREN's interim results reflect branch numbers as of the end of December 2024 for Standard Bank, ABSA, Netbank, except Capitec Bank. The numbers reflect data as of February 2025. According to the assessment, the number of branches across the banks dropped from 3,299 branches in December 2023 to 3,290 branches in December 2024. As banks scale down their physical presence and accelerate digital migration, what new cybersecurity vulnerabilities emerge in South Africa's retail banking sector, and how can legacy banks adequately prepare to address them? Cybersecurity analyst Lucien Pierce weighs in.
For me, or concern for me, is the use of artificial intelligence by hackers and malefactors and fraudsters to try to dupe banks and their clients into giving away their money and being defrauded of their savings. In this regard, I think that deep fakes are going to be a particular problem.
With the reduction in physical branches, more customers are relying on mobile and online banking platforms. Lucien shares some of the biggest cybersecurity threats facing these digital channels and ways that banks can enhance protection without compromising user experience.
My view is that this is going to be an even bigger problem for the retail banks in the short term. The reason I say so is because with advances in various types of technology, and I've mentioned artificial intelligence, the ordinary consumer is likely to be duped and to be deceived more easily if such types of technology are used.
He says South Africa's top banks should invest enough in cybersecurity infrastructure and talent to match their digital ambitions. No doubt, this will come with a lot of job cuts. Our attempt to get comment from the South African Society of Bank Officials Union was indeed unsuccessful. From Johannesburg, South Africa, Innocent Samos, Channels Television News.
And still in South Africa, after a notable uptick in the first quarter of the year, the Agricultural Business Chamber of South Africa Industrial Development Corporation Agribusiness Confidence Index fell by 5 points to 65 in the second quarter of 2025. Most respondents pointed to the uncertain global trade environment, lingering geopolitical tensions, and domestic animal disease challenge as some of the key factors constraining the sector. Despite the slight decline, the current level of the ACI implies that South African agribusiness remains optimistic about business conditions in the country. The better summer rains and improvements at the ports, which have enabled exports with minimal interruptions, are some of the positive aspects reported by respondents. 6 of the 10 sub-indices that make up the ACI declined in the second quarter, while the rest remained unchanged. The turnover sub-index confidence declined by 5 points to 55. And then we head to Zimbabwe, where the ZiG currency continues to experience widespread usage in the economy, with the latest statistics showing that local currency transactions on the national payment system have risen by 17% since the introduction of the currency in April 2024. A statement released by the Reserve Bank of Zimbabwe reveals that local currency transactions on the national payment system have since risen from 26% in April last year to the current level of 43%. According to RBZ, the amount of foreign currency reserves now stands at more than $700 million, another important milestone in supporting the ZiG currency. The Reserve Bank of Zimbabwe also notes that the economy is set to achieve its set growth target of 6% this year, owing to a successful agricultural season. And in Egypt, Egyptian Prime Minister Mustafa Madoubi has announced the start of development of a large gold deposit. He notes that the Suraki mine remains one of the largest in the world, and its reserves will last for about 10 years. The total gold production over the next 8 years, he says, will exceed the total production over the past decade. The discovery and development of the new deposit are set to galvanize both foreign and domestic investments in Egypt's mining industry. The government has incorporated mining expansion into a comprehensive strategy designed to fully leverage the nation's mineral wealth. This highlights the state's commitment, and he emphasizes that authorities are cultivating a favorable investment environment by revising legislation and upgrading essential infrastructure. Just before we head to the crypto space, let's tell you what St. Kitts, or why St. Kitts is interested in Nigeria, and they met with some investors in the Federal Capital Territory, Abuja.
It's the official opening of the Bilateral Trade and Investment Summit between Nigeria and St. Kitts and Nevis. The summit themed Two Nations, One Rhythm, Bridging Culture, Building Future, seeks to build stronger relationship in key sectors: trade, agribusiness, culture, and the creative economy. In his opening remarks, the Prime Minister of St. Kitts and Nevis, Mr. Terence Michael Drew, went down memory lane to emphasize the cultural relations between the two countries and called for increased partnership, possibilities, and progress.
Once used for suffering and separation, it will now become a corridor of prosperity and partnership. It will be used to trade goods and services, knowledge and culture, peace and opportunity for the benefit of all of our people.
Some participants, an amazing 3 days has been put together by the wonderful and capable teams working with Honorable Samal Duggins and the Aquarian Consult team. Please utilize this platform, make the connections, create the partnerships, form the bonds.
Government officials from both countries share similar sentiments and have called for partnerships that will elevate their interests on the global economic map.
Right to say that by expanding its frontiers for strengthening engagement, Nigeria, like other nations, and St. Kitts and Nevis, can access new investment opportunities, leverage international expertise, and promote agricultural trade.
People often ask, what can a small island like St. Kitts offer to a giant like Nigeria? And I say to this, completeness. We offer stability, diplomacy, a strong banking system.
A key highlight of the summit is the high-level panel discussion titled Empowering Afro-Caribbean Trade, MSME Investment and Value Chain Opportunities, focused on developing actionable strategies to unlock investment, scale MSME growth, and build resilient supply chains across the two regions.
And so now let's see what's happening in the world of crypto. We see a red color. I guess this is a reflection of what's going on in the stock market also. The war is real and the uncertainty is real. But I thought by now, crypto perhaps will be a hedge, just like gold, when there's a geopolitical or other uncertainties. But perhaps there are some other reasons why the crypto market is in the red. But we see Bitcoin has gone down to $105,882.54 in 24 hours, lost almost 1%, 0.83 to be precise. Ethereum has dropped from about 2,600 that we saw about this time yesterday. It's now 2,559.74, losing more than 2%. XRP is also in the red. This is like a reverse of what we had. At some point, there was hope, or there were signs or talks about peace from Iran. But I think that changed this morning, and so we see this volatility in a lot of markets. Only the metals seem to be enjoying or being used as a hedge. And so it's mostly red for most of the coins in cryptocurrency. Let's see the stories making the rounds also in crypto. It's El Salvador is back in the news. They've added 240 Bitcoin since the signing of the IMF loan agreement. Remember that El Salvador, they continued their Bitcoin daily purchases. That was not part of the agreement they had with the IMF when they wanted to access the loan. So El Salvador has continued its daily Bitcoin purchases, adding 240 Bitcoin since December, despite that $1.4 billion IMF agreement that discourages public sector accumulation of it. El Salvador has purchased this and since 19 years, and that's despite that loan. And El Salvador's treasury wallet now holds 6,209 BTC. That's what El Salvador now has of BTC, of Bitcoin. The daily purchases initiated by the president in 2022 have continued in spite of that agreement, and government officials have recently confirmed these acquisitions, with Economy Minister Maria Luisa Hayem stating that asset accumulation remains a key strategic priority for the country. So there you have it. El Salvador has added 250 Bitcoin in spite of the loan that they got from IMF, and they now have a total of 6,209. Away from El Salvador now, Bitcoin.com launches the first MENA office, Middle East. We've seen some news, we've seen them even inculcate cryptocurrency into salary payments, that's public sector and all of that. So now we see Bitcoin.com launching their very first office in the Middle East. The crypto services firm launching that in Multi-Commodities Center. That's what they call the Dubai Multi-Commodities Center. And it's the first headquarters in that region. The company's move anchors DMCC's leading position as a global hub for Web3 and blockchain innovation. It's located in Uptown Tower, and the crypto center is currently home to over 650 companies operating across the blockchain and digital assets. I think the Middle East, they have a plan and they seem to be following it religiously, including blockchain infrastructure providers, tokenization platforms, metaverse enablers, and major DeFi projects. Bitcoin.com provided millions of users worldwide with digital assets through their accessible education platform and global news sites. The strategic expansion will reinforce the Emirates' digital economy, contributing its global expertise to accelerating the growth of the regional crypto system. It says it's worth highlighting that DMCC counts more than 3,200 tech companies, including over 800 companies within its integrated technology and innovation system, which encompasses the DMCC Crypto Center. So there you have it. I hope we won't lose some of our crypto people to the Middle East. Seems to be gaining a lot of momentum right there. There's also Bitcoin mining. The costs seems to be going up. It's pricier as firms like H100 double down. Talking about mining. So they say Bitcoin mining costs have surged past $70,000 amid rising energy prices. And Sweden's H100 group secured up to $79 million from Blockstream CEO Adam Back. Bitcoin's role in corporate finance continues to evolve as production costs climb and treasury adoption expands. And the median cost to mine one Bitcoin now has risen to over $70,000 this quarter. And this pressurizing miners to maintain efficiency amid soaring energy prices. At the same time, Swedish health tech firm H100 Group has secured a financing of $79 million. So these are the headlines going on there. Will this stop the mining of Bitcoin, or will it add value to the Bitcoin that is already in circulation? Time will tell. But that's it on the program today. Thank you so much for being a part of Business Incorporated. We'll be back tomorrow, God's grace, to take you around the world of business again. And I think tomorrow I have a surprise for you. Just watch, and then you will know what that surprise is. I'm Mini John Meko. Enjoy the rest of your day.